Hello guys, Crypto Main here, Lee. Just want to show you the Indicator Club, the custom indicators that I've built. So if you join the Indicator Club, guys, it's $75 per month. If you already have GBot, then it's $50 a month. So that's a reduced fee if you've already got GBot. Just want to show you how it works, basically, guys. So I'm going to try and keep the video brief because I do tend to talk too much. Thanks so much for your attention and for having a look at this video for me. Okay guys, this is a 4-hour chart on the Bitcoin. You can see actually that mostly it was ranging. Actually, now that we look back at this, it's actually looked quite a close range. Broke down, obviously then formed a bottom and now broke the range highs, and so it looks like we're getting continuation. But this is quite a choppy period, as you'll know. Been a bit tricky to trade. There's been some patterns which have managed to play out on a smaller term time frames, but generally speaking, you know, in terms of just basically sideways for a long while yet. So going back to sort of mid-July, yeah, just sort of sideways, but a nice range to trade. But anyway, guys, I'm just going to try. We're on a 4-hour Bitcoin 4-hour chart at the moment, and I'm just going to show you the hybrid indicator. I'm going to show you the first part of the indicator. First of all, okay, so what you're looking at basically here is you're looking at the background to highlight the areas of interest, so overbought and oversold territories. All of the indicator parameters are actually customizable, guys. This is just set out of the box, ready to go as it is. So what you're looking for is for the red is obviously looking at peaks and the green's looking at dips. So what you're looking at is oversold, oversold here and overbought here. Okay, so red is looking to a pullback and green is looking to take off. Okay, green for go, guys. Right, so okay, you can, if we look at just this period here, you can see that immediately it jumps out at you that if you were to enter here when the background turned red, then for a short, then obviously you'd have been wiped out. So the first main rule of this indicator is that you must wait for the background color to change from being in color back to just to disappearing, basically. Okay, so that's what you're looking for. You're looking at the edges of the indicator, so it changes from indicating something to not indicating something. Okay, if that makes sense. So rather than entering here at the bottom, you'd be watching and you'd be waiting for the indicator to change from being red into being just clear. And of course, you'd have taken your entry at the top there. Okay, same for this one, guys. When you're looking at longs, green and finishes, off we go. Green starts, obviously you don't want to be longing here, you want to wait for the green bar. So we're actually coming down whilst it's green, as you can see. So you wait for the green to finish. So what the colours are doing is basically identifying optimised areas for you to be prepared for looking for what's about to change and what's about to happen. Okay, so nice clear indications. Bear in mind this is a 4-hour time frame, and bear in mind the number of candles which are inside those bars. You get lots of notice about what to look for and when to look for the change and when to get the entries. Okay, guys, so this top part of the indicator, the first one, believe it or not, is actually secondary to this second part of the indicator. So originally these two indicators were one code, okay, but I separated them out, and the reason for that is because we're getting runtime errors and things. There's very complicated strategies that hold in the background here that can make these calculations. Link's about to break out by the looks of it. So yeah, so we've got some very, very complex calculations going on in the background, and because of that, I separated the two indicators out so it runs more smoothly. And actually I prefer it like this, because when you customize it, you can customize the top separately to the and differently to the bottom one if you want to. Okay, so to further optimize this and to miss out on any noisy signals, what you're actually looking for, okay guys, I'm just going to show you this indicator and explain this second part of the indicator. I'm going to open this up and I'm going to show you what this is about, because this is this is really where the indicator actually has the magic, shall we say. So what we're looking for, guys, is you see that we've got what we call a hybrid composite blue line. Okay, and I call it that because it's made up of a very complex calculation method in the background. Okay, so I'm just going to show you what the lines mean. So the purple line is RSI. Okay, so you can see on the right here, you can see looking at this chart like this, or sorry, this indicator like this, you've got RSI and there's the reading there. Okay, so don't be confused. Don't think that this is just an RSI indicator. We're interested in the composite RSI, in the composite hybrid blue line, and that's the key part of this indicator. But I want to show you what it all does so you understand it all. Okay, so you've got RSI in purple, you've got stochastic percentage D and percentage K. Okay, and those are, you know, the faint lines in the background there. So they give you early indications of change of direction, and they basically work. Percentage K and percentage D, for those of you that don't know, are a variation of two moving averages, but they work off stochastic as opposed to anything else. Okay, so it's very different. Stochastic measures RSI, and stochastic are very different measurements. Okay, now the composite RSI is the blue line. This is the one we're interested in, and that is made up of a mix and a hybrid hybrid sort of complicated calculation in the background that takes into consideration RSI, percentage K, percentage D, and stochastic. It also looks at volume, and it looks at weighted volume and weighted composite moving averages, basically. So without going on to the details of it, I'm trying to make this a very simple visual mechanism with very complex calculations behind it, so it makes it so that anybody can use it. So the idea is that anybody that can trade or is new to trading rather, can just pick this indicator up and just get going and start trading. So don't want lots of complexities, lots of noise. I want it to be very simple to look at and very complex in the background, which is what I managed to achieve, which I'm very pleased with. So just going to show you on the back so in the styling of things. So you've got RSI length, you can see it's customizable, stochastic length, smooth K, smooth D, these are all customizable settings. Volume MA link, so what that is, that's actually looking at the volume moving average for the background, in the background. Okay, and so why does it do that? So if we look at the style here, please make sure, guys, when you look at this, is that this setting is on the thickest line. Okay, if you leave it on the thin line, you'll notice that the blue line is just one color. If you set the color 0 to the thicker line, you'll notice now that there's two blue colors on the hybrid composite hybrid line. Okay, what that means is the dark blue is looking at a volume weighted average over the last set time period, which is set here. Okay, so that's a volume weighted moving average based on the last 10 the last 10 candles. Okay, excuse me. So what we want to do, the moving average here, the MA length here, is this green color here, as you can see on the chart here. So the composite line is the most important, and the MA, this is a moving average. It's not a standard moving average. You can change it from SMA to EMA, but this is actually a moving average of the composite calculation itself. Okay, so very different. This indicator is very unique, and you can't get it anywhere else. Basically, it's not unless somebody else designs something which works off the similar parameters. But it did take me months to put together and to finalise and to optimise and all those things. So, you know, if they do, great. But at the moment, not that I'm aware of it. This is a unique indicator, and there's nothing else like it out there. Okay, guys. So overbought and oversold levels. We'll come to these later. These are very important. Okay, and we'll come to those later. But these customised settings are the most important and valuable part of this indicator. Okay, so we're just going to leave it as is. That's all the working mechanisms. You can do all sorts of things, like if you don't want to see the percentage K, percentage D, you just click them, turn them off. If you didn't want the RSI, you just click it, turn it off. If you didn't want the moving average, which of course you absolutely would, but you know, if you want to make the chart look like you want to change colours. Some people like dark backgrounds. I prefer the light, so you might want to change the colour so it looks more fancy or looks nicer on your chart. Background, everything's customisable basically. Okay, guys. So going back to the actual nuts and bolts, how do we make money using this indicator? That's what we want to. That's what we want to do. So what we're looking at is, you look at the background. You've got a big thick red. You see that the red finishes. You notice inside this indicator that the blue line, it crosses down below the moving average here, but the red hasn't finished. Okay, so this is a signal. I personally wouldn't take that signal necessarily, because the red is still showing that we're looking at possibly sideways action, and ultimately look, it ended in an upside move, not a downside move. So what we're looking at, guys, is we're looking at the red finishing. We're looking at the composite, that line, the blue line, crossing below. So it's crossed above and still in the red, and then you see the red finishes, then the composite line crosses below the green moving average here. Okay, so your entry for this particular trade would be here. Okay, and then what you would do is you would wait until the composite line comes back down. You see the percentage K, percentage D start to tip up. You also see the composite line come to the extreme. That little dark, light coloured dotted line in the background is the extremes of the range. You can see it comes back down to the extremes, starts to tip back up there. You could exit there, guys, but I personally wouldn't recommend that. What I actually do is I wait for the crossover you can see that's where the optimal exit is. Okay, here. Okay, but what I like to do is I like to wait till the confirmation so that the it crosses back. The composite indicator crosses back of the moving average. Okay, so let's just have a look. This is a 4-hour time frame, as I say. So let's just have a look. Let's suppose we took our entry and we took the exit. So that's a $4,700 move on that one trade in that one position. Okay, if you did decide that you were happy when you got down to this point and you saw that we'd reached the extremities and that things were taking a toll, i.e. dark volume, we're getting to the end, to the parameters of the usual lows for this indicator, and then volume starts to decline, and it starts to reverse as volume's declining, suggesting that the power of this move is starting to wear off. Then you'd have had a $6,300 move on that one trade. Okay, guys. So just looking at the next one then. So we're looking at a green one here. Green moving average finishes. Lovely. What you'll notice here is that the composite doesn't actually cross until here. Okay. That's where the composite actually crossed here. So if you were following the rules, your entry for this particular one, I can find where it is. There it is. So your entry would be here. Okay, and then you would wait for the cross back down when the composite crosses back down, which is here. Okay, so yes, you could enter once the green's finished. You could enter when you see the composite starting to curl up for optimal entry. I don't do that, and you'll find why. If you start doing that, you'll find out why quite quickly, because the trades do reverse and they do catch you out if you try to do that. So I wait for the composite to cross, which will be entry here, exit when the composite line crosses back down. Okay, so this is going to be a smaller win. Okay, it's going to be a smaller win, but it's a $3,000 win. Let's just go back to the last trade where we took your entry and we took your exit there. $5,600, $3,000. We're going to go to the next trade now, which is here. Green background finishes, composite line crosses here, entry is here, exit composite, so the blue line composite line crosses up, and then you get the stochastic crossover, the percentage D, percentage K giving you warnings. You get the the curling down, should we say, like an M top on the indicator here. So you could exit there, but again, I don't. I wait until I've got the composite signal to cross back down. Sometimes it comes back down, bounces off, and then this carries on upwards. So I wait for that confirmed cross of that composite moving average. Everyone can change, I'm not telling you what to do, but everybody can do, you can use this indicator however you want to. Okay, entry, exit, entry here, exit on the cross, $3,000 move. So go to the most recent one. Oh, incidentally, guys, just while I mention it, just while I think of it, when you get the green cross, obviously you get the blue composite line cross the green. Obviously you can see here it carries on up, and then you can see in the background you've got the purple RSI, and the composite line actually crosses the RSI as well. That is a secondary signal, more likely for continuation. So the composite line crossing the purple line in the background is also like a secondary signal. But what we're looking for is the actual green line. Okay, in this instance, we're looking for the composite to cross the green line, and then you get a secondary signal, which gives you a bit more confidence that it's going to get some continuation because it's crossed the RSI as well. Okay, going back to the latest signal then. So obviously everyone sort of woke up in the morning. Bitcoin had taken off, shot off, $4,000 or whatever it was overnight, which got everybody very excited. Probably a lot of people were expecting continuation. We know that the CME gap, let's say the CME gap told us otherwise. But and hopefully you got the message, guys, and you managed to protect yourselves from not jumping in too quickly here. The future's bright, mind you, guys, but just it was just nice to be able to hopefully give you forewarning about that. Okay, so what we're going to do now, look, guys, you've got the red, the background actually finished. We've got the composite crossover here. Okay, we've got the composite crossover here. strictly speaking, you can see that the composite line here is right the way down here. Okay, it's very far away from that moving average. Can you see that? So we're getting a bounce now. Okay, and we're getting a bounce off the mean of the Bollinger Band, which may result in a nice positive move. But this overall composite is telling us this isn't finished yet. Okay, it's trying to curl upwards here, but even if it does, that moving average is quite far away. Okay, this indicator does move very quickly, so they can connect quite quickly. It's surprising how fast this indicator works, but at the moment it's saying this isn't necessarily the best point to be entering long. Okay, this position, this trade that we entered at the top here, it's not finished. Okay, it's not at the point where you'd be looking to exit. Okay, so it gives you a nice warning, not just about the trade that you're in, but about the market in general. And I've been using it for months, and I think it's absolutely fantastic. And I know I probably would say that, but you can see the RSI is starting to cross up. Okay, so the RSI is trying to cross the composite moving average, but that's not what I'm interested in. I wouldn't be exiting this trade, this short position, until this composite line has crossed that moving average. Okay, guys, I hope I'm not repeating myself too much. I just want to make it clear, because if you don't use the indicator in that way, then it won't be as good as it can be for you. Okay, you can still use it, and I'll give you an example. Let me just get rid of all of these drawings for you. You can use it outside of these territories, which you can see on this chart. For example, here we've got a sorry, where are we? So here we've got a composite crossover of the moving average. Okay, and the moving average crossed back over here. Okay, so if you took that trade and you're watching for the cross at the for the curling over and things here, and you managed to exit there, you would have had a nice result. Let's just have a quick look at what that would be. Okay, so you took your position there and you exit at the top. Very tradable. It's a $1,600 move. No harm. That's a lovely. If you're using leverage, that's a lovely position to take. But you see how if you'd have waited and if you follow the rules, you'd have entered here and you would have exited when the cross happened on the back, to the downside. So that trade, if you followed the rules without following the background rules of the background colours, it would have been a losing position. Okay, so what am I saying, guys? What I'm saying is these composite signals are all valid when they cross. They're all valid and they are all tradable. Okay, on any time frame you can use this indicator, any time frame, and also any asset, and it is fully customizable. But to get the best out of it, what I've found in my own use is to wait for the background color to stop, take the composite crossover, and exit when the composite crosses over in the opposite direction. Okay, and that's as simple as that, guys. It's 1 and 2 indicators. Now I'm going to show you the third indicator. And this indicator it took a long time to get this indicator right. Okay, but it's actually one of my favourites, and what it does is it shows you quite quickly the volume. So what it tries to do, it's not a very good time frame to show you on now, but what it does is, for example, you can see from the time here that it's look at the time on my clock there. It's 17 minutes past 4 in the afternoon. Okay, so we're 17 minutes into a 1 hour time frame. Okay, so what this is telling us is that the volume that's passed at the moment on this indicator in the first 17 minutes of this hour, and it's gone. There it is. In the first 17 minutes of the hour, in comparison to the last hour, there's 147% more volume up to this point than there was in the last hour. Okay, so what the blue does is the blue projects based on where it is now. It takes a calculation if you back test it. If it applies the proportion of change now over the time period that's transpired, it will project out where the volume candle is likely to finish. Okay, and inside that is the black spike line. Now sometimes you see this spike line literally take off, and usually it can happen very early in a candle, which gives you a really clear indication of what's to come. Okay, so why is this useful? Well, what you can do is you can have a look at the size of the candle. Volume indicators are very good, but you're always looking backwards, and we need to know what's next, and that's what this is trying to do. So what it does is it's saying, look, if we look at the size of that last candle, guys, that is a nice sized candle compared to the volume that we've had previously, just from looking at the chart there. A nice sized candle. Well, this volume is suggesting that there's 137% more volume already than there was at this time in the last candle. So what that suggests is you can expect to see this candle be the same size, similar if not larger than the last candle. Okay, so it gives you an indication that the possibilities are that the price is going to carry on. Now, the only thing I'd say, just a bit of caution, as with anything, nothing's 100%. If the bears suddenly come in and they don't want this to break out, the volume can tick up, and it can show as very large volume because the bears and the bulls are battling. So if you see it breaking out, and sometimes you see it come down and it goes all the way back down and there's a large wick, the volume is because the bears and the bulls are battling out. But where this volume indicator is very useful is if you're coming up against resistance and you see the volume starting to increase as you're getting into resistance or down to support. If volume's increasing, it is going to try to attempt to break through the support or the resistance. And it also, for the move of continuation, it tells you that we're starting to go up now and the volume's increasing as price is going up, so you're more likely to get continuation, and we're also pushing the Bollinger Bands as well. Okay, and on the flip side of that, if we were up against resistance now and then we were 20 minutes into a new candle and they said that the volume was minus 80%, then you'd know that the candle and the volume is really waning. So it's coming up against resistance, the volume's waning, the chances are it's not going to break resistance, it's going to roll over and come back down. Okay guys, so that's number 2, indicator 1, indicator 2, indicator 3, and I'll show you the last indicator as well. So go back to the 4-hour time frame for this. What I'll do, guys, if you purchase the indicator and you want to have a little one-to-one with me or something, we can set up a meeting, or we can do like a call where I just run by any questions that you've got or anything like that, so we can set up a Google Meet or something like that, and we can just go through things. Okay, so the 4th indicator is this one. Okay, so what this does, if I switch the other indicators off for a minute so it doesn't distract us. Obviously you can use them all together, but at the minute I'll just turn it off. So what this is saying now is you've got you can set these parameters to have a look at what moving average you want. So at the moment I've got it set as a 21 of 50. I've changed that to 21 of 55, which is a silver cross. The look back period of things, this is look back period for high low, maximum historical crossover. So these averages are calculated based on the number of previous. So this is based on 100 of these previous examples where the bull or bear cross is shown. Okay, so it's measuring from 100 variations, and that's customizable. Okay, the bins one, this is where it comes in really useful. See, these are all adjustable, and these are the percentages that are adjustable. So bin 1 is 1.75, as you can see there. You can see if I change that to 100, then it would change it in there to 100. Okay, so whatever you put in there, it changes here. So what it's doing, what's the indicator for? Okay, so we set the bins, and what it's telling you is the EMA crossover probability. So what it's saying is, once you get a bull cross, okay, there's a 1% chance. There's on a bull cross, there's a 96% chance you'll get a 1% move. Okay, there's an 80% chance of a 2% move, and there's a 75% chance of a 2.5% move. So it gives you some indication of where you're going to put your take profit. Okay, when you start to get to 4%, then you're starting to get like a 60%. So what you're looking for is to optimize this so you get the best, and all of this is customizable. So let's say 80's great, 96 fantastic, 80's great. Let's say you wanted to go somewhere in between that, and you wanted to go let's say you wanted to change that to see what 1.5 looks like. You can choose any of those and just change it to 1.5. So let's say, for example, sorry, I didn't mean to do that, go to bin 3, let's change it to 1.5, so it's between the two, and you'll see there's a 96% of 1%, there's an 80% chance of 2%, there's an 85% chance of a 1.5%. Okay, so you might decide that 1.5% is your optimum point of position for a bull cross. Okay, and then obviously you've got the bear crosses as well. So what this is saying is basically there's a 95% chance on a bear cross of getting 1% to the downside, bear 74% of chance of getting a 2% cross to the downside, and an 86% chance of getting a 1.5% cross to the downside. Okay guys, so what it's doing is it's trying to give you an indication of where the price is going to end up. Okay, so that you've got you'll know where you're going to be taking profits. Okay, so as with anything guys, you can add all these indicators together if you choose to do that, and then you've got like a full suite of potential possibilities, probabilities, high points, trade entries. You've got bearish and bullish EMA crosses. Bear in mind guys that the EMA crossover, as I said, hopefully you picked up on that, the EMA cross is customizable, so you can change this to anything. You can have this as 1334, works on any time frame, works on any asset, any crypto. The only thing I'd say guys is that if you work on like the total charts and things like that, because of the way that their volumes are set up, then it doesn't work very well. The volume indicator doesn't work very well, and the volume one doesn't work very well, but the EMA crossover will still give you an idea of percentages. Okay, so nothing's perfect guys, but let me tell you, in my opinion, this collection of 4 indicators used together will give you a massive edge on your trading, particularly if you're a brand new trader or you're not very experienced. This will give you a very clear indication of what you should be doing and when you should be doing it. And most importantly guys, and I think this is the real key takeaway, is that some people, it's easy to tell you when to sell, to buy and where to sell. It's easy to look at the simplicities like stop, support and resistance and things like that. But with an indicator like this, it will show you not only where you're buying but also where you're exiting. And lots of people don't know where to exit, and lots of people are either they get too carried away by their emotions. The price is going up, they want to hold it for too long, or the price is coming down and they want to hold the short for too long, and you end up, obviously, the trade going against you, and you end up losing money rather than gaining. Okay, a big thing that I learned a long time ago is that take what the market is offering you. Don't try and set yourself a target of, say, I want to make $100 on this trade. What you want to do is you want to look at the chart and take what the chart offers you when the exit comes. If it's $86, don't try waiting for your $100, because you'll very likely lose the position. Okay guys, hopefully this all makes sense. I've waffled on again and I can't stop myself, I do apologise, but guys, I'm really enthusiastic, and I just want to, the bear market's coming guys, and we need to have as many tools as we can get at our disposal to make sure that we combat the bear market when it happens, and that we're making money on the way down as well as on the way up, and we're catching the bounces and things like that on the way down, and we reverse our trading style and everything like that, and we're ready for it. GBot trades in both directions guys. GBot is completely separate to this. It's my baby. I love it. I'm very proud of it, and I optimize it and I look at it all the time. I've got various versions of it going, and I've got various optimizations which are under test, and it will get better and better. So guys, thanks ever so much for listening to me waffling on, and for being in the group. Most importantly guys, really appreciate you. Thanks for all your support, and staying with me through this, what's been the most frustrating cycle that I can remember. So guys, all the best, take care. Remember guys, take profits, buy something real. All the best.